All right, let's get right into it. Kenya is rolling out what might just be one of the most ambitious economic shifts in its history. We're talking about a plan to totally change how it builds its future, a massive KSH 5 trillion strategy called the National Infrastructure Fund. But really, it all boils down to this one huge question. How on earth do you build something enormous, like a brand new international airport, without either hitting up taxpayers for more money or just piling on more national debt? That's the puzzle Kenya is trying to solve right now. And the answer they've landed on is a complete shift in thinking. You can see it right here. We're moving away from the old way of doing things, using tax shillings and big government loans that just make public debt bigger and bigger. And we're moving to a totally new model, one that runs on private investment and projects that actually pay for themselves. That right there is the core idea of the National Infrastructure Fund. Now, to really get why this is such a game changer, we have to first understand the sheer scale of the challenge that Kenya is up against. The numbers here are just mind-boggling. Over the next 10 years, Kenya needs something like 4.5 trillion shillings just to build the roads, the railways, the power projects it needs to grow. That is a colossal funding gap. And look, this isn't some problem for the distant future. Every single year, there's a shortfall of around 800 billion shillings. That's the difference between what the country needs to build and what the government can realistically afford. So yeah, the old way of doing things, it's just not going to cut it anymore. So, what's the government's answer to all this? Well, it's this brand new playbook, the National Infrastructure Fund, or NIF for short. I love this quote from Citizen Digital because it just simplifies the whole thing perfectly. Instead of the government using tax money for roads, think of the NIF as a giant investment company. Its job is to go out, raise money from investors, use that to build stuff, and then make sure those projects earn a return. Simple as that. And the goal here is, frankly, audacious. We're talking about mobilizing 5 trillion shillings in a decade. And this money isn't supposed to come from our taxes. No, it's about attracting capital from huge players. Pension funds, private investors, global partners, all looking for a safe place to put their money for a good long-term return. Okay, so that's the big picture. But how does this thing actually work? Let's get into the mechanics of it. The entire model, and I mean the whole thing, hinges on this one key idea, a bankable project. Now, this isn't just any old project. It has to be something that can make its own money, generate its own revenue stream. Think tolls from a highway or fees at an airport. And a project like expanding Jomo Kenyatta International Airport is the perfect example. Why is it bankable? Because it's a moneymaker. It has all these different predictable ways of earning cash. Landing fees, passenger charges, cargo, all the shops. All of that can be used to pay back the people who invested in it. So a big question is, where does the first bit of money come from? This part's really clever. The seed capital, the money to get the fund started, isn't coming from the national budget. Instead, it's being raised by selling off shares in state-owned companies, like the Kenya Pipeline Company and a slice of the government's stake in Safaricom. So here's how the financing model is supposed to work, step by step. First, the government puts in that seed money from selling state assets. Second, the NIIF uses that initial cash as leverage to attract way bigger investments from the private sector. Third, and this is absolutely crucial, a separate little company called a Special Purpose Vehicle, or SPV, is set up for each specific project. This SPV holds all the investment and, more importantly, all the risk. And finally, the investors get their money back from the money the project itself makes, not from the taxpayer. So that's the how, but what about the what? What are the actual nation-changing projects this fund is supposed to build? The vision here is absolutely massive. We are talking about projects that could transform the country. Things like the JKIA expansion we mentioned, finally extending the SGR Railway all the way to Malaba, the critical Rironi-Mouse Summit Highway, the huge Galana-Kulalu irrigation project, and a major upgrade to our national ICT backbone. And this isn't just talk. President William Ruto has been very clear about this. The JKIA expansion is going to be the very first project to get going under this new model. That's a huge signal that they're serious about making this happen. But, of course, a plan this big, this different, doesn't come without a serious debate. It's a high-stakes gamble, and you have to look at the potential rewards and the very real risks involved. And this slide really breaks down that debate. On one side, you have the supporters, and they're saying this is a game changer. It unlocks private money,
it eases the debt burden on the country, and it just speeds up development. But on the other side, critics are raising some serious red flags. They're worried about the risk of hidden debt that's off the government's main books, a potential lack of proper oversight, and way too much power ending up in the hands of the Treasury.
And a lot of that concern comes down to one simple question. Who's really in control here? I mean, look at this governance structure. You've got a governing council and a board of directors, but pay close attention to who's doing the appointing: the president and the cabinet secretary for the Treasury. Critics worry that this could politicize an organization that needs to be all about professional, sound investment decisions.
And here's a really important, kind of technical detail in this whole debate about oversight. Yes, the fund will be audited by the Auditor General, which is great. But because its money flows outside the main government bank account, it doesn't fall under the direct watch of the Controller of Budget. And that's a really important watchdog for how public money is spent. It's a major point of concern for a lot of people.
So when you strip everything else away, what are we really looking at? This is a fundamental seismic shift for Kenya. It's a move away from that old, tired tax and borrow model. It's a huge bet on an investment-led model, a bet that private capital can be harnessed to build the country's future. Ultimately, that's what this is. It's a high-stakes bet that professionalism can win out over politics. And the biggest question of all remains unanswered. Will this incredibly bold experiment unlock a new era of development for Kenya? Or will it end up creating a new, complicated class of hidden debts for the next generation to deal with? Well, only time will tell.